Hello, this is Randy Lindsay with Hawkeye Traders. A quick market update today. I just want to take a quick look at volatility. The volatility in these markets, as you know, is screeching. It's screaming out from a historical low volatility range down in 10 to 12, 14 range. We've seen since February a huge jump back up to 80. If you look back historically on a monthly chart, you can see that the last time we saw levels this high was back in 2008, 2009. Blow up of the housing market. The huge amount of volatility crushed it all the way up to looks like a high of around 89.53. The high that we've seen this month right now has been up to 85. So you can see we're very close to historic highs on that. But you can see with the advent of quantitative easing and then reintroduction of liquidity into the market, you can see the prices and the volatility starting to ease back down to looks like a projected norm, possible midpoint, but we would be expecting to see price and volatility get back down into this more lower range and see it ease back down a little bit more. But 30 would be the downside target for volatility, and it's currently rising back up from the current levels on the daily chart. You can see it coming back up into this level, but this is still a huge range for volatility, and this volatility range is going to continue to show an increase in the market prices as well. What we're seeing from all of the liquidity in the markets is that the markets are starting to rebound today. You can see that we went down under 2200, which was a nice support level. You can see on the weekly chart the S&P found good support at 2200. Now the advent of some liquidity in the market, we're starting to see prices come back up as some people are starting to try to see and use the cash available to get back into the market. But this isn't saying the market route is over. It's just saying that there's a marked comeback so far in the market. Nasdaq is so far the strongest. It's starting to bounce back and come back. It found support just under 6,700, and we were looking for that to start stabilizing as well, and it looks like it's doing that. Today it's a big up day with again the same news, and it found a monthly support that it held off of as well. We're starting to see the fat boy on the daily chart. All the markets are starting to turning up. One notable highlight was the gold market. If you saw the gold futures overnight, they went ballistic. After they bounced off of support, they went way high up into almost 1700 overnight. Huge move in the gold markets overnight. So we're looking at almost $100 a straight shot there just from the opening of the Australian and into the London sessions. So watch for gold to really open strong this morning. A lot of gap ups, but a lot of profit taking probably, as well as a lot of uncertainty is starting to pour over into the gold markets. Back to coffee, when what we were talking about last week, I was saying that it was a good time to start looking at and starting positions within coffee. That put that out about $1.08. Prices are trading up around 125 today, so that's a $17 move on coffee at $375 a contract. That's a pretty nice move. So anybody that has started to look at accumulating, Hawkeye went long on coffee 2 days ago on the 20th, just about 118. We're currently trading at 125. Target of 120 has been surpassed. 135 is the next target, and then 140 to 145 is the target after that. Again, like I said, with an eventual target possibly back around 200 to 220 range, unless some of the events in Africa and other places change the outlook of the global supply of coffee. We'll have to keep an eye on that. But this is a good eye. You're watching for the tools to give you indication of the move. So get a copy of your own Hawkeye software by clicking in the link below, either through our trial or through any specials that we might be coming out. Right now we're looking at a nice trial of the Hawkeye Professional Package. Get started today for $1. You will have a full 2 weeks to try that out, and then see if you can't take advantage of the volatility while it's here. Thank you for your time.